All right, so let's jump into bonus depreciation. As we call it in our office, you'll see we call it super bonus. I don't know that that's a technical term. Wouldn't look that up on the IRS's website, but basically it is super bonus. Bonus has been supercharged. As I mentioned earlier, bonus has been around for a number of years. The IRS has used bonus to stimulate the economy. So when the economy is not doing well, they'll increase the bonus percentage. When economy is doing well, they'll decrease the bonus percentage. Let's back up to 2017. At the beginning of 2017, bonus depreciation was at 50%. It was on assets that had a useful life of 20 years or less, and they had to be brand new assets. So I'll give you an example. I buy a bulldozer, a brand new bulldozer at the beginning of 2017 for $1 million. I would be able to take $500,000 or 50% of that as a deduction in the first year. The other $500,000 or the other 50% would get spread out over the useful life of that bulldozer. Fast forward to the end of 2017, Donald Trump's our president. Donald Trump owns real estate, and Donald Trump revised the tax code. It was very favorable to real estate investors. A few things changed. One is they increased the bonus percentage from 50% to 100%. So as you can see over here on this chart to the right, any assets placed into service between 9/27 of 17 to 12/31 of 2022 were eligible for 100% bonus. You can see any assets bought last year in 2023 were eligible for 80%. This year it's 60%, and then it slowly phases out 20% every year until 2027 when it's down to zero. Now, that's the current tax law. There is a bill in Congress right now. It's actually passed the House. It's sitting with the Senate. They're trying to extend the 100% bonus through 2025. So we're watching that closely. Honestly, my opinion, because we're in an election year, I think the Senate is going to hold it up and probably not pass anything until after the election. But they are trying to extend the 100% bonus, so we'll have to watch and see if that gets extended. So let me go back to that bulldozer example. So now, if I buy a bulldozer in 2018, two things changed. One, it went from 50% bonus to 100% bonus. So now if I buy a $1 million bulldozer, I get a $1 million deduction, or 100% of that as a deduction in the first year. That was the first change, which is huge. Number two is they added 6 words. It's 5 or 6 words. I'm going to count them here in a moment. But they added 5 or 6 words to the tax code that made a huge difference. And I don't even think that the folks in Congress knew that these were added and knew what the impact would be, but they added the words "new" to "you, the taxpayer." So that's actually 6 words. So remember, I had to buy, in that old example, I had to buy a brand new bulldozer in order for it to be eligible for bonus. Now I can buy a used bulldozer. It's new to me, the taxpayer, and I'm eligible for 100% bonus. So enough about bulldozers. I don't know how many of us are selling bulldozers. Most of us are in real estate. So let's talk about how this applies to real estate. If I buy a used building, a building that was built in 1980, and I bought it in, let's call it 2018, I'm eligible for 100% bonus depreciation on all the assets in that building that have a useful life of 20 years or less. Now, we'll present this oftentimes to tax preparers, and they say, well, Erik, bonus depreciation doesn't apply to real estate investors because real estate, remember, gets depreciated over 27.5 years or 39 years. And in order to take advantage of bonus, you have to have assets with a useful life of 20 years or less. And I said, well, that is true. However, if you do a cost seg study, we go in and identify the 5, 7, and 15-year assets. All of a sudden, that 30%, if you remember, I mentioned we usually segregate around 30%, that 30% is now eligible for bonus. And so we're creating massive tax deductions. Let's just do some simple math. Let's say I buy a $300,000 home, residential unit. If we segregate 30% of that, that would be around $100,000. And if I now get 100% bonus depreciation on that, I get that full $100,000 deduction all in year 1, which means, again, I can reduce my taxable income by $100,000. So if I'm in a 37% tax bracket, that's a $37,000 tax savings when I bought that $300,000 home.